All right, welcome to another video here with Boulder Creek Investments. I'm James Gregg. With me, John Wires, one of the partners at Boulder Creek, and also joining us today is Jon Olson, insurance agent, business owner, insurance expert, maybe. But anyway, John's here to give us a little bit of advice on insurance, working with contractors, and that type of thing. So, John, can you give us a kind of a brief introduction to you and your business and what you're all about?
Sure. I am a insurance agent over here in Independence, Missouri. I'm licensed in several different states, so we can help out with Missouri, Kansas, Nebraska, Iowa, Oklahoma, Texas, just to name a few. So have different licenses. I've been in the insurance business for almost 20 years, so I've seen a lot of different things as far as the personal and business and contractors insurance. I know it's what we're going to talk about a little bit today. So thanks for having me.
Nice. Yeah, thanks for being here.
Sounds good. Okay. And your main concentration, obviously, you go over different fields of insurance. Would you say it's real estate over contractors or a mixture of both, just for the audience out there?
Sure. We do several different types of businesses, but yeah, we do work with real estate investors as well as contractors quite a bit. So
Okay.
yeah, we handle a variety of things. So
Sounds good. And that's how we'll mix up the questions today. A little bit about real estate, property insurance, and then get a little bit into the contractor insurance. So let's get into coverage policies. Um, let's start out with a pretty basic question. A lot of new investors may want to know when they're looking for coverages. Can you explain the difference between an actual versus replacement cost, especially if they need to make a claim on some damaged property?
oh, absolutely. So this is probably your number one thing that is going to be frustrating for a new investor that maybe just bought their original policy based on price. Because you can either have a replacement cost policy, which is going to be what does it cost to have a licensed insured contractor repair the damage, whether that's fire damage, water damage, kicked in door due to theft or vandalism, whatever that's covered claim is. Actual cash value is going to be a less expensive policy for a premium, but it's also not going to cover as much, or it's going to depreciate the value of the repairs based on either the age of the structure. It could be the age and the condition of the items that were damaged. Was it is a sheetrock old? Is the flooring old? Is the kitchen dated, a little dated? Those type of things. So, and that's going to come after your deductible. So, if you're trying to get that unit back to pre damage condition and you want to get your the rents back, it might cost you a lot more than just your traditional deductible.
And generally, would you say if you made a claim, do the insurance companies cut you the check minus the deductible, or do they pay it directly to the contractor? What do you regularly see? Or is
It's going to depend on the insurance company and the size of the claim.
okay?
Insurance companies are going to give the actual cash value amount first, typically. So they're gonna have their adjuster come out to assess the damage, what needs to be done. Then they will take that total valuation that they come up with. They're going to figure out the actual cash value or depreciated amount, and then take off the deductible, and then typically give the insured a check. So that could also be made out to a mortgage company along with the insured, because the mortgage company has an interest in making sure that property is repaired and the insured is not just pocketing the money. So then typically after they have proof, like a final invoice from my contractor that damage is repaired, then if it's a replacement cost policy, they could issue a supplemental check for the difference.
Interesting.
Gotcha.
Yeah, I didn't realize they do the supplemental check. I thought they did the replacement up front. So, yeah, that's something to be aware of.
Yeah,
Okay.
that's pretty much an industry standard, whether that's a homeowner claim, an investor claim. The only thing that's not quite that way is maybe your personal auto insurance. So because that's kind of replacement cost up to the value of the car. So.
Okay.
Gotcha. Now, kind of going along the theme of insurance gotchas here for a minute. What about like a loss of income? Is that something that you see regularly with policies, or is that kind of an additional thing that someone should ask about?
Yeah, so that's a great question. When it comes to investment properties or rental properties, especially, I see a lot of them that don't have a loss of income, or some companies call it loss of rents, while the damage is being repaired. Because let's say you had a 20-unit apartment building and half the units were damaged by fire, but maybe the other half couldn't be lived in. They don't need to be repaired, but because of the level of contracting, those people have to, relocate for a certain amount of time. Obviously, if on that size of claim, it's not going to be something that's done in 2 weeks. Mm-hmm. So you want to have a loss of income and a loss of rents, and some companies will give you a certain percentage. Others will give you a flat dollar amount. Other ones, you have to ask for it. So you definitely want to make sure it's on your policy, but the amount of coverage can vary drastically.
Okay.
Okay. So I guess that would that's going to cover one of the other questions we were going to go into as far as loss of rents. What would you say about building ordinance and codes coverage?
So this
what are those, and do you need them?
Yeah, I would definitely encourage all policies, whether it's a primary homeowner, a condo, a policy possibly, or an investment property, have the building ordinance and codes coverage. So a lot of the preferred package policies out there, regardless of the insurance company, are going to include probably 10% of whatever the structure is insured for. So if you have $1 million investment structure, you should have $100,000 of building ordinance and law coverage. So this is going to basically cover any code updates that need to be done after an insurance claim. So if there's an electrical fire, let's say, in one of the units, and that particular complex is 40 years old, well, then they might need to do a lot more electrical work than just the handful of units that might be damaged if the whole building wasn't damaged. So that's going to pay for that an additional cost up to that like $100,000 limit in that scenario. So, and if you don't have that coverage, the city, wherever that property is located, to get the permits and all that stuff to get it done right, they're going to require that. So if you don't have that coverage, guess what? Well, that's an extra expense, that you are going to incur over your deductible, over, if you have the actual cash value versus replacement, then, that could definitely be another gotcha. That is going to be a less than pleasant experience, unfortunately.
Now, is that a standard thing that people generally see, or is that something that you need to call out and you need to ask for if you're insuring a building like that?
It's very common on personal homeowner policies. On rental properties, whether that's a single family, duplex, triplex, or something larger, it's probably going to be something you need to ask about. I wouldn't say it's included on there too. A lot of it depends on the agent. Is the agent really trying to shave down your premium and shave down your coverage? Or do they want you to have a good experience, and if it costs you a few dollars more to have the right coverage, so that when a claim happens, you're not, an extremely upset client, how are they reacting? So
gotcha. Okay.
just like investors, some investors won't want to spend a dime maintaining the property. Some insurance agents, are not the greatest insurance agents either. It just depends on, the quality of the person that's transacting the business.
That makes sense. Okay.
Yeah, you bring up a good point too, because investors definitely can be on the cheaper side. So, the insured stuff you're getting from them is definitely minimal, especially maybe for people who are doing flips. versus someone, that's going to be living their home for a decade plus.
Absolutely.
Mhm.
Okay. Sounds good.
Cool. Just to kind of keep things moving, I think we could talk about insurance gotchas all day long, but one question that I did want to get in before we run out of time was just the importance of kind of transitioning to renter's insurance and sort of what recommendations you have for that. Should they have it? What are best practices? How much should they have? Those types of things.
Mm-hmm. So yeah, in my personal opinion, all the individuals that rent a house or apartment, should have renter's insurance, because the policy for the building is not going to cover any of their stuff, and not going to cover their TV, their couch, their blender, or anything like that. So they should really want coverage for their stuff. And most renters policies are anywhere between $10 to $30 a month. So it's not expensive at all. So from a building owner and investor perspective, one of the things that I see a lot is people in their lease, they require renter's insurance from their tenants. They say, we are not responsible. Sign off on this initial, line, whatever, which is great. And maybe they even go so far as to get a certificate of coverage before they give them the keys to move in. But they don't do any follow-up afterwards. So that person might just get renter's insurance. They might pay their 1 month premium and they don't pay it month 2 because they don't see the value of it. So, but the complex has no idea that policy canceled. So one of the things that I encourage investors to do is to build that into their lease. Like it's probably already there, but take it a step further and list the building owner or property manager as an additional insured. When they do that as an additional insured, you get a copy of the policy. You also get a copy of any type of cancellation type notices. So if that person didn't pay their premium month 2 or month 6 or whenever that might be. So it takes a little more work, but it's something, number one, the tenant should have it anyway, but it's also protecting you as the business owner and the investor, because when you do that, let's say you require a certain amount of liability coverage. I would say 100,000 or 300,000 is pretty common on a renter's policy. But let's say that tenant does something to damage the property accidentally, but they do. Whether they left the candle burning, they left a space heater on, they left a bathtub overflow, you would much rather file a claim under that tenant's renter's insurance policy for their liability, because you don't have a deductible. They're paying 100% of the repairs. And, so you're not going to have a claim or a black eye on your record and have to deal with your insurance. You're dealing with their insurance. But it takes, like I said, it takes a little bit of effort to actually manage that particular aspect. So the bigger apartment complexes in Lee Summit and Overland Park, they have, one person that's in charge of that, because I know I have, tenants that live in those complexes, and they call or they email every year and they ask for an updated policy as well. So, it's one layer, property manager might do it, or it could be, the actual building owner, depending on the investor situation. So.
Got it. Thanks.
And how much are they expected to pay for that? Is that something around $100 a year, or how far am I off on that one?
Oh, as far as the actual cost to the tenant?
Yeah, for the tenant insurance.
So the tenant insurance policies are probably, I don't think you'll probably find much for $100,000 or $100 a year.
Okay.
But it's probably between $150 and $300.
Okay.
Depending on the number of, how much personal property the actual tenant wants. Do they want 10,000 of personal property, or 20,000, 30, 40, 50, whatever that number is.
Okay.
And then obviously their deductible, if they're combining it with their personal car insurance, they might get a discount. So there's a number of factors in there, but it should be anywhere between, $15 to $30 a month. It shouldn't be much more than 30, even under a high level, high amount of coverage, no discount type situation. So.
That definitely is cheaper than having your insurance for a home. And It personally would help me out when I had a tenant that had a kitchen fire a long time ago. Definitely would have saved me a few grand. So,
Right.
the more
Did
you
they?
know. So, no,
Yeah.
that's definitely good
Did
information.
your tenant cause that fire,
Yes.
or was it just like a freak electrical type thing?
No, it was a candle
A
actually.
candle?
Yeah.
Okay, yeah. Well, candle, grease fire, space heaters, all of that stuff can be uh, a lot of trauma, a lot of situation for everybody involved. So,
Okay, sounds
Yeah.
good. Well, what we could do too is I know we have a long list of other contractor questions. Let's actually schedule a part 2 on it, and then we'll go more into the contractor side just so we can make 2 series. That'll be better for both of us. In the meantime, though, can you tell people how to contact you? You also have a meetup that you host, that type of information?
sure. Thanks, John. Yeah, you can, as I said, my office is in Independence. Our phone number here is 816-795-5977. I also am a big fan of technology, so you can actually text an office number as well. It's not my cell phone, which is a different number. Or you can catch me via email. It's Jon, Jon, at olsoninsurancekc.com. So, and on there too. So I'm sure you can probably put a link or something in there too.
Okay.
As far as the business meetup that I host here in Kansas City, you can find the group on Facebook. Just search for Kansas City Business Owner Connections, or KCBOC is the acronym. So we have a lot of different businesses that we want to try to network and connect together from, people that do real estate or mortgages or insurance. Maybe they have a brick and mortar shop. Maybe they're an accountant or a CPA, but we have a good amount of people in there. So there's about 1,300 individuals here in Kansas City. But you could just find that group on Facebook and look at the rules and decide if you want to do that. Be a part of the online community. And then we also have monthly in-person events for that group as well. So you can get to meet people face to face as well as online. So
Awesome.
Nice.
Yeah, and I recommend everyone definitely check out Jon's services. He definitely knows what he's doing. He knows a lot of people. If he can't help you, he'll know someone that definitely can. So, anything else, James?
No, I think that's it. I love learning about the gotchas though.
So
you just want to learn about them before they truly do get you.
That's right. I'd rather learn this way than the other way.
Absolutely, 1,000%.
Yeah, but you don't get that experience though, and the stories to tell. I don't know if it's worth it, but I guess I'd rather hear other people's stories.
Cool. All right. Well, with that, then, I guess we'll wrap up. Jon Olson, great to have you. Thank you so much for being here. Thanks for the info. And for John and myself and Boulder Creek, it's been great to talk with you. So thanks again.
Absolutely. Thanks, guys.
Thanks, Jon.
See ya.